If we take, give me a second. So here when we discuss that, in first we need to prepare trading account, then comes profit and loss account, and the last one is balance sheet. And trading account, in trading account, for example, if we take any business or any types of trading where it takes place normally, which is involved in purchases and sales. With regard to that, we are discussing now. So in trading account, if we take the example of a stationery shop, in stationery shop, they'll sell some books, but the person who's carrying or taking or carrying that business, selling of books, so he's not manufacturing the books. Instead, rather than that, he's purchasing from one of the supplier, and then he's purchasing from supplier and then he's selling to the customers. But whenever he wants to purchase, means in order to sell his goods, first of all, he has to purchase. So he will do the purchases from suppliers. But how the goods will be coming to the place of his business? They cannot walk, they cannot run, means they have to come through some type of transportation. That we call it as freight or carriage inwards. Why we are calling carriage inwards? Because the goods from the where we have purchased from the supplier to the place where we are selling, we are bringing some transportation is required. So in trading account, purchases and all those expenses will be taken into consideration, which are directly related to purchases. Such as, okay, the books are coming to our shop or to our place of business in some sort of transportation. It may be some auto trolley or some lorry or some other vehicle. But who is going to put all those books into that trolley? So we need some people, they are called as labor. And to labor, we pay wages. So for purchases, what are related? Wages are related, direct expenses, carriage inwards. If you are getting from some other imports, excise duty, cess. So whatever all the expenses that are directly related to the purchases, we consider in the trading account. So when we purchase, what is the purpose of purchasing any goods? The main purpose of purchasing any goods is nothing but for the sales purpose. So we will sell the goods. But is it possible? Maybe we will be observing normally in nearby our houses or somewhere. If you just observe any shop, they'll not sell all the goods at a time. It's not possible. Some goods will be left over in the shop itself. That we call them as closing stock. Means whenever they're preparing, or normally this is prepared to find out whether our business is earning profit or loss. So how to know that profit or loss? When it will be prepared? We will, as a business person, as it is our business, we will, as per the accounting standards or accounting rules, accounts are prepared at the end of the year. Mostly it will be 31st March of every year, and it starts on 1st April of every year. This is the accounting year or financial year. So when he is calculating at the end of the year, because the main motive or object of every business is nothing but to earn the profit. That is the main motive. We are not running our business for any social service. Okay. So whenever the main purpose of carrying out any business is to get the profits, to earn the profits. So whether our business is earning profits or not is known by preparing this final accounts. In that final accounts, we prepare. So final accounts include trading account, profit and loss account, and balance sheet. These three things these three statements, and two accounts and one statement is prepared to know whether a business is earning profit or loss. In that process, first we will prepare trading account. In trading account, it is like nothing but a T shape. It is in the form of T shape. So in T shape, we will prepare like this: credit and debit, same as ledger account it will be. On right hand side, we write credit, and the left hand side, we write debit. So whenever we purchase, it means we are due to the suppliers, debit all expenses. Am I right or not? Or real account rule, debit what comes in. Whenever you are purchasing the goods, it means goods are coming into the business. That should be debited. So I write here two purchases. So for purchases, what I'm purchasing? I am purchasing some books. So books will be carried through some transportation to my shop. So that is called nothing but carriage inwards. It is debit all expenses and losses as per real account. So I will debit all expenses such as carriage inwards. Next, wages also now. Labor we require because the goods should be uploaded into the lorry or some transportation. So I'll pay wages to them. Debit all expense again. So wages is an expenditure to me. I will debit. Now, for what purpose I'm purchasing these goods? To sell to the customers. So when will I sell these goods to the customers? So whenever I sell, goods are going out of the business. Credit what goes out as per real account rule. So I am crediting the sales. I give a name when I sell to the customers as sales. Now, whenever I'm selling, it is not mandatory that whatever goods I purchase, I will sell in the same period. It may be leftover, few goods are leftover. So that is called as closing stock. That is called as closing stock. As I'm not selling, but in future, they will be sold. In the assumption of that, I'll be writing on the credit side by closing stock. So the difference of credit and debit. If credit side is more and debit side is less, we call it as gross profit. We call it as gross profit. And if debit is more and credit is less, we call it as gross loss. And one more thing, I said here we have closing stock at the end of the period. But this closing stock will become next year opening stock. So in whichever year I am preparing, maybe some stock is left over the last year or previous year, that will be carried forward. So that will be written as to opening stock on the debit side. Is it clear? Are you audible? Am I audible to you all?
Yes, ma'am.
Are you able to follow me, or should I explain it again?
Yeah, follow me.
Yeah, okay. So this is called as trading account. This we call it as trading account. So trading account consists of whatever we purchasing and whatever we are selling. And here in this account, we take only direct expenses which are related to purchases. So that's what they mentioned here. Just we'll look it once again. So you can see the profitability trading account. So gross profit or gross loss, the difference will be either gross profit or gross loss when you prepare trading account. That is that is the output of trading account. Now, next we have profit and loss account. In profit and loss account, we write all those expenses which are indirectly related to the purchases and sales. Mostly purchases and also sales, which are not directly related to the purchases. Such as, for example, we are purchasing some certain number of goods from the supplier, but I cannot store all the goods in my shop. So what I'll do, what I require some godown or some place where I can store all the goods which I purchased from the supplier. And okay, who will then I brought and I kept in the godown. But how would I know how much is the stock left over? How much is the stock again I have to purchase? So I need some person to look after. That person I call it as employee. That person I called as employee. For employees, what do I pay? What we will pay for employees, ma? We pay salary. We pay salary. So go down means we need some. If I have my own go down, it's fine. If I don't have any go down, I have to take on rent basis. So I will pay rent. So if it is a small business, it's okay. If it is a medium size or where the turnover is more than 5 lakhs or 10 lakhs or 15 lakhs, I need some office to be there. But for office, what do I require? For office, I require lighting, electricity, fan, computer, printer. I require all those things. Then how to get all those things? The whatever the expenses I am paying towards them, they are all called as indirect expenses. They are called as indirect expenses. So now, first we will try to discuss mostly about the trading account. So in the gross profit, they are asking you to find some more thing. That is cost of goods sold. If you can just look at here, there is a term called cost of goods sold. So cost of goods sold is nothing but whatever I said just now. I said na trading account. In trading account, debit side we write purchases, wages, means all direct expenses, and credit side we write sales, closing stock, and debit side even we write opening stock. So cost of goods sold.
అందులో మీరు చేంజెస్ చేసుకుంటే అయిపోతుంది డేట్.
Hello.
Old existing.
Excuse me. So cost of goods sold is nothing but the difference of net sales and the cost of goods sold. Gross profit. So what is cost of goods sold? All the things on the debit side, that is opening stock plus purchases plus direct expenses minus closing stock. All the things on the debit side. On debit side, what we have? We have opening stock, we have purchases, we have direct expenses. From that, if we deduct closing stock, we get cost of goods sold. So this is nothing but from the trading account only we take all these things and we find out the cost of goods sold. And the difference of sales and cost of goods sold is nothing but the gross profit. So this is the format of trading account. Just now we discussed. That is opening stock on the debit side. Purchases. Yeah, please keep yourself on mute. Whoever it is.
దీంట్లో మైనస్ చేయండి వాల్యూ. ఇక్కడ మైనస్ 226 ఈ రెండు బ్రాకెట్.
Yeah.
ఓకే. రిమార్క్ అయిపోయింది. అది రాయండి.
Yes, Karthik Reddy, please keep yourself on mute. It's a lot of disturbance. Karthik Reddy, please mute yourself. Yeah, that would be fine.
I love PDF. Okay.
Old staff. అంటే కొంతమంది ఓల్డ్ ఈ ఇన్వాయిస్.
Karthik Reddy, please mute. Arey.
Total staff including is there any difference now? Payment is ఇందులో పేమెంట్ ఇది
Sir, please. Even
Yes.
host and Karthik Reddy mute, sir.
Yes, I will. Yes, ma'am. You can continue.
Yes, sir. So you want
So we can just look at here. This is a trading account. In trading account, we have on the debit side opening stock, that is nothing from the nothing but the whichever the stock left over in the previous year, that is carried forward.
Total salaries, manpower salaries.
And on the debit side, we have purchases. Whatever we have purchased, that is our goods are coming into the business, so it is debited. And all the direct expenses such as carriage, we have wages, fuel and power, customs duty, octroi, excise duty, loyalty. These all are related to direct purchases. So we call them as direct expenses. And on the credit side, we have sales minus sales returns. Means anything customers has returned back to us, that is less sales returns. So we will deduct from the sales, and whatever stock is left over, that is called as closing stock. So the difference of credit and the debit. If credit is more and debit is less, we call it as gross profit. And if debit is more and the credit is less, we call it as gross loss. And this gross profit or gross loss will be transferred to the profit and loss account. Is it clear? Trading account?
yes, ma'am.
Yeah. So man, importance of trading account, they are given trading results, means whatever purchases we are doing, what are the sales we are incurring, and what are the expenses that are related to the directly related to the purchases. That will show the important trading account. And also it will helpful in finding the comparative analysis, that whether we are getting gross profit or gross loss. If we are getting gross profit, what is the profit we are getting from the earlier year? Is there improvement in that or not? And also we can even find out inventory management, means what is the stock that is left over, how much we are purchasing, how much we are selling, and any new product has been launched or how should we introduce, if we introduce, at which period we have introduced, that all will be known through trading account. So preparation of trading account, all the direct expenses, sales and purchases will be taken. Shall we do one problem related to the trading account? Yes.
Yes, ma'am.
Yeah. Shall we go through illustrations or the questions given over here? As you say. Here they are asking only cost of goods sold. Carriage inwards. Yeah. Or any self-assessment questions are given for us. At the end, we'll look after that. Okay, otherwise let's understand one illustration, then we will go for preparing of profit and loss account. I think this would be much beneficial if you look at it. Question number 3. So just look at here. Prepare a trading account of Mr. Ramji for the year ending 31st March 2018 from the following particulars. Cash sales, credit sales. So sales are of two types. First, before going to this, sales are of two types. One is cash sales. The other one is credit sales. Normally, credit sales means first we will sell and the customer will pay us at the later period. And cash sales means not immediately the payment will be made by the customer. Stock of goods on 1st April, stock of goods on 31st March. So as I said, our year starts on 1st April and ends on 31st March. So here stock on goods of 1st April means it is opening stock. Stock on goods on 1st April means is nothing but the opening stock. And stock on 31st March means this is nothing but the closing stock. Next, again, we have cash purchases, credit purchases. So here we are, even as a businessman, we are doing cash purchases from suppliers as well as credit purchases from suppliers. So It means we will purchase from the supplier goods and we will pay him later. Now we have next term, return inwards. Return inwards means the goods are coming back. When the goods will come back to our business? When goods are sold. When goods are sold to the customer and customer is not satisfied, that goods will be returned back to us. So it is nothing but sales returns. Return inwards is nothing but sales returns. Now next we have return outwards. Return outward means we are giving our goods to someone returning back. So when we will return our goods? When we purchased the goods and any goods is defective and which are of not good quality, we will return them. Earlier we purchased, now we are returning. So return outwards is nothing but purchase returns. Return outwards is nothing but purchase returns. Next, goods withdrawn by Ramji for personal use. So first here, personal use means anything withdrawn by the owner for the personal purpose. In accountancy, a specific name is given that is called as drawings. Anything either in the form of cash or in the form of goods. Either in the form of cash or in the form of goods withdrawn by the owner. That is here Ramji. Withdrawn by the Ramji for personal use, we call them as drawings. So here drawings, what is telling? Goods withdrawn by Ramji. Goods means he has taken from the business. Whenever the goods are taken from the business, from where the goods have actually come into the business? Something should be done, na? It can, because we don't have any manufacturing unit where goods are manufactured. So from where the goods have came into the business first? Yes, any idea?
From factory
Goods?
or yes, ma'am.
No, we are not manufacturing. Ours is not manufacturing business. It's only trading business. It means we have purchased. Am I right?
Yes, ma'am.
We have purchased and that goods only we will sell it. Now, instead of selling, few goods are taken by the owner for his personal purpose. So that is drawings. So whenever the goods are taken from the personal purpose means goods are being taken from purchases. So purchases value will decrease. Next, goods distributed as free samples during the year. For example, yours is a new business or a new shop, or you have started newly. So what you'll do as a promotion basis, as a part of advertising, sometimes it is a promotion, sales promotion technique. Normally, it is a traditional sales promotion technique. They will give few samples free. You can take it as free. They will not charge anything. So whenever he is giving for free purpose, it means from where he is giving that goods again? From the purchases which he has purchased from supplier. So whenever he is giving goods for sample purpose, means his purchases value is going to decrease. Next, carriage inwards. So carriage inwards means what I said, we will purchase, for example, the same example, stationery shop. I purchased books from some supplier. Now the goods should come to my place. So how they will come? Through some transportation. That is nothing but carriage inwards. Why we call it as carriage inwards? Carriage means some goods are carried. Why inwards means the purchases, the goods which I have purchased that are coming into the business. That is the reason this carriage inwards means this is the direct expenditure that is related to the purchases. Next we have carriage outwards. Carriage outwards means when it takes place. Now I brought books to my shop. Now I sold books to customers. There is one customer who has purchased a good number of books which cannot be carried by himself. So what I'll do? I will arrange some transportation to send the goods purchased by my customer to his place. So that is nothing but carriage outwards. So that is related to sales. This is indirect expenditure. Carriage outwards is a indirect expenditure. Why? Because in trading account, we take only direct expenses. No indirect expenses will not be taken. And one more thing you may get it out. Madam, goods are withdrawn by the Ramji for his own personal purpose. As business is own himself, why again it is written as drawings? Because we have some concepts and conventions, which we call it as accounting principles. We call it as accounting principles. In accounting principles, we have concepts and conventions. We have concepts and conventions. Accounting concepts, we call it as. In that concepts, there is one important concept that is called as business entity concept. Business entity concept. As per this concept, it says that though the owner himself has started the business, but for accounting purpose, he will be treated as separate only. Business is separate, owner is separate. So as per that concept, anything taken by the owner, we call it as drawings. Is it clear now, the explanation of this? Now let's look at the solution part. So just look at here. Before going to the answer, just first we'll try to have. So as I said, trading account. In trading account, it will be in T shape. Credit side, debit side. Sales. Sales means what I said, account to real account, credit what goes out. Whenever we are selling goods, it will be credited by sales. But under sales, if you look at here, they given cash sales, credit sale. So what we will do? Under this we write cash sales. Amount is 10 lakhs. Next we have credit sales. Amount is 25 lakhs. We add these two, but we write in the inner column only. Why? Because we have sales returns. Sorry, sales returns are here. So 35 lakhs minus return inwards. Because when we sell goods going from the business, when customer is returning, goods are coming into the business. So return inwards amount is 45,000. 35 lakhs minus 45,000, and the difference will be written in the outer column. Next we have goods. Stock on April 1st means what I said? It is opening stock. So to opening stock on the debit side, and the amount is 5 lakhs. Next we have stock on 31st March. This is nothing but closing stock. That will be written on the credit side by closing stock, and the amount is 9 lakhs. Next we have purchases. Again in purchases we have cash purchases as well credit purchases. So I write on the debit side 2 purchases. Under that, underline, under that cash purchases, amount is 7,50,000, and credit purchases amount is 14,15,000. Add these two figures and write in the inner column. So we get 22 lakhs. From this, we have written outwards nothing but purchase returns. Because we purchased means whenever we purchases, we means as a business, we purchase, goods were coming. When we are returning back, goods are going out. So less purchase returns. That is 35,000. Now here it is not the end. Why? Because we have goods withdrawn by owner, that is drawings, and goods distributed as sample. So these two should be deducted from purchases. That's what they made here. You can just look at here. See, purchase returns less goods used for personal use, goods used as sample use. That all will be deducted, and the remaining balance is written here in the outer column. Next, we have carriage inwards. What I said, carriage inwards means that is expenses incurred while bringing goods to the business. So it is a direct expense. All expenses as per real account, all expenses are debited to as per nominal account. So here it is debited to carriage inwards on the debit side. And carriage outwards will not be taken. Why? Because it is a indirect expenditure. All indirect expenses are taken in the profit and loss account, not in the trading account. So now if you look at here, uh, see here total 34 lakhs 55,000 sales and closing stock is 9 lakhs. So total is 43 lakhs 55,000. And here debit is 21 lakh 34,000 means 26 lakhs, 26 lakhs 49 50. So their debit side is 26 lakhs 50,000. And here it is 43 lakh 55,000. So credit is more and debit is less. So whenever credit is more and debit is less, means credit means it's an income. Debit means it's an expenditure. Income is more and expenditures are less. So difference will be gross profit. And this is transferred to profit and loss account, which is a continuation of trading account. Is it clear? Any more explanation you required for trading account?
It's clear.
Is it clear? Yeah. So now we move to the next one.
Ma'am, we have another class.
Yeah, ma?
We have another class in 3:30.
You have another class, 3:30?
Oh, yes, 3:30.
Okay, then. Shall I wind up?
Yes, ma'am.
Okay. So tomorrow we'll continue profit and loss account and we'll try to even find out the balance sheet tomorrow.
Okay.
Is it clear?
Okay.
Okay.
Okay, just give me a second. Okay. The remaining will continue tomorrow.
Okay.
Okay.